It's Tuesday, that means it's Trading Tip Tuesday. Let's take a look at pivot points, something that I lean on extremely heavily for my own trading, use it every day, use it in all my analysis. Pivot points are these horizontal lines you see here. Based on the time frame that they're measuring, they look at the high, low, and close of that time frame. So the yearly pivot points look at the high, low, and close of the previous year and then give you projections for potential price action in the next year. If it's monthly, it'll look at the current month and give you a projection for the next month, that sort of thing. So these will print either on the first of the month. You can use daily pivots if you want, first of the year, whatever. If you're trading high time frames like me, you're going to look at yearly. If you're looking at lower time frames, scalping, or if you're trading alts, you're probably looking at the monthly pivots or lower. Some of the stuff starts to break down most likely as you go down to low time frames. As always, it's best to just look at high time frames. You want high capture data. You want less noise to signal. Sometimes the stuff will be a little too slow, which is why you want to sort of move around with monthly and yearly. But as a whole, I've always been a fan of the yearly pivots. So if your chart looks like this, that means you're on linear scaling and not log scaling, at least for BTC. Something else you'll notice is for a lot of this crypto stuff, the support pivots actually go below zero, which is just part of the formula. Obviously, it's not really possible to go below zero theoretically, crypto pricing wise. And if your charts look like this, that means you're on log scale but haven't adjusted the y-axis. So what you need to do is click and drag the y-axis, and that'll turn off auto fit, and that way you can see the pivots up here versus all the nonsense in the negative territory down there. So once we have that all figured out, we're on log, we're on yearly pivots, we're on a y-axis that makes sense. One way to trade these is to think of them as a ladder for price, to think of it as a probability system for price, especially as the year begins, to think of it as a price target helper for trend over the course of the year. So you'll see the pivot point and then resistance 1, 2, 3, 4, 5, support 1, 2, 3, 4, 5. If we're in a bullish trend that's obvious, arguably like we are now, then I wouldn't expect price within the year to exceed the R5 yearly pivot. Now you can add R6, 7 to 10 to infinity, right? It's just a formula, you can keep adding these. But typically we don't see most things move past the R5 yearly pivot within the same year. Obviously there are definitely exceptions for that rule, as was the case in 2017. If we move past an R5 yearly pivot within a year, then you know we're in a very special situation. We are in bubble territory, because it says the probability of us moving past the R5 yearly pivot at the beginning of the year, is less than us remaining within that pivot structure. Something else you'll notice is the pivots are very tight if the previous year is very non-volatile. So if the range is flat over the previous year, pivots will be tight. As there is range expansion, pivots will expand. So this is just saying that the support and resistance levels of the following year are expected to be sort of blown out a little bit, expanded as price expands. And it's always good to backtest any indicator you're looking at, obviously. But again, I'm looking at these as a ladder, not necessarily as expectations. But if we approach those levels, price should acknowledge them to some degree. You typically see support and resistance around something like yearly pivots. A lot of these stick out to me just because I've looked at them so much at this point. But I like seeing this where there's obvious resistance, obvious support, obvious resistance, price acknowledging the yearly pivot, price acknowledging the yearly pivot right now at the R1. What I don't like to see is this free floating price where there's no near support pivots. There's no near resistance pivots. That's not something you generally want to see if you're using this in a trading system. And on the support side, another way to look at this is what is the probability of us breaking, and for example, 2018, what is the probability of us breaking the S1 yearly pivot if we came from above the yearly pivot? You have to think of it like that in your head. So the numbers don't change, but how you might interpret it or trade it will obviously change. So as I look at this, 100K looks like the cap for the year based on high, low, and close of the previous year for BTC. I'm looking at support around 22, and all these resistances on the way up are what I'd be watching on lower time frames. You don't have to stick to this high capture stuff. You can go to the 12-hour, 4-hour, but keep the yearly pivots on there, because if we break above 36, we're headed to 48. If we break above 48, we're headed to 67. That's part of the ladder system. Here's ETH and how the pivots have worked for ETH. Most of ETH's life in 2019 really was free floating completely. So when you see this, you have to move to the monthly pivots because you have nothing to go on, right? Because the previous year was so volatile and then we had no support pivots printing, you have nothing to go off of, right? And the same thing with this R5 in 2017. We went way above that R5. We even broke below the S1 in 2018. So this gets loosey-goosey with altcoins, definitely. Even in 2020, it's just free floating. There's no really like massive support here. But on the way up, as we're bullish, I'm reading all these as a ladder, especially this R1, R2 situation. The way price is positioned now, it looks like it wants 1800 or 1750, whatever that yearly pivot is. I wouldn't expect anything below 550 this year, this yearly pivot. You can also set bids or asks at these levels. So your bids are at 550, your bids are at 950, and then your asks are at all these levels on the way up. You can do this on the monthly if you're looking to exit quicker. If you're in the mindset of I need to get out of this position, but I don't want to sell everything right now. I want a dollar cost average out of the position. How should I do that? You can set asks at each level based on the yearly pivots. Here's ETH BTC. So it works for, any chart, anything that has data and a chart, you can find it, right? You can look at all these pivots. This hasn't always been perfect. I'm just looking at this massive place where there's no support resist pivots, right? Just absolutely free floating. But in 2020, here we're back at some sort of acknowledgement of levels here. And in 2021, we are currently at the R1 yearly pivot. So if this breaks 038, the expectation is it moves to 049. We're finally back within the realm of where the yearly pivots are making a little more sense. And on the way down, definitely support here, definitely support here. So, hopefully this is pretty obvious once you see it over and over again. With Link USD, pretty interesting. Link has broken above the R5 yearly pivot the past 2 years. So I wouldn't expect this year to be any different, which is why I like 60 as far as the R5 target for Link. You can see how low the support gets once these pivots get blown out like this. Do I think Link's ever going to go back to $1.50? Probably not anytime soon. That's probably the doldrums of the bear market. Link 150 is kind of like looking at BTC at 3K from 20K, right? Like that's the ultimate bear target. Something else about ETH, you're looking at 2800 as far as the R5 yearly pivot, which is only a 2x from here. But this says, be careful with the R5. Obviously it can go higher. And we're in a different ball game completely once that happens. This is probably the most reasonable expectation where it'll get to the R5 and sort of relax at that point, even get to the R5 a little more extended and relax at that point. So again, Link 60, here's Link BTC. You can see it's kind of free floating despite breaking R5 yearly pivots 2 years in a row as well. So this thing is a hot mess. I would definitely watch stuff that's massively volatile like this on the monthly pivots, but 80,000 sats is a good resistance level. 130,000, all these levels on the way up are going to be important if price keeps moving. Here's .USD 4-hour. This is the monthly pivots now, just to show an example of what this would look like on a lower time frame alt situation. Right now, DOT is between the R3 and R4, so I would put bids at the R2, R1, and the pivot. You can see how it returned to the pivot and then sort of catapulted from there. Same thing really in December. In December, it sort of hovered around this and then catapulted from there. But that's how I would read the low time frame stuff. Support, 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 resistance, resistance. Here's .BTC on the monthly pivots as well. And you can see how it just kept creeping down these levels, was sort of free floating between nothingness. Another way you can look at these is, if this then that decision tree probability, if this gets between the S2 and the S3, then I'm going to start buying. If this gets between the R3 and the R4, then I'm going to start selling. If this bounces on the S1 or breaks above the pivot, I'm going to start buying. You can use all of that as information for strength or weakness throughout any given trend. And more often than not, I use the yearly pivots with a bunch of other stuff. So this is Monero USD on the daily. Yearly pivots. Yearly pivots currently at 120. I'm looking at volume profile of the visible range. So there's been a lot of volume at that level. This is the 200-day moving average, which is also at 120. There's further volume at 85 to 100. So my read on this is 120 is a massive support based on three things: 200-day moving average, yearly pivot, and VPVR. Price should not break that level. The probability of price breaking that level in the near term is probably close to 5% or less, extremely low. So I would treat that as a heavy bid zone for me personally. And then you can treat the levels on the way up as sell zones. You can look at the R5 as the maximum for the year at around 550, almost a new all-time high, or a new all-time high just barely. So yearly pivots and monthly pivots are always a good sanity check. If something is extremely overbought or oversold, you can use it as a probability indicator, momentum indicator, just a place where you need logical bids and asks. Pivot points are very helpful.